This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
Hello, fam. It is Dan Max at eXp Realty, aka the trading agent. Back to basic series. Let's do Fibonacci's in this video. Fibonacci retracements, Fibonacci extensions, Fibonacci sequencing in general is very powerful. It's, nature's order in chaos. If you go and study how he came about those numbers, you learn it's just a sequencing patterns that repeat in nature over and over and over. Why is it important to trading? Well, trading is organized chaos. The markets are organized chaos. Algorithms and computers are running things for the most part these days. Maybe not so much when I started trading in the late 90s, but keep it simple. Those are the parameters that the computers are kind of creating these parameters, and if people are entering the data and the information that they want the computers to run by, Fibonacci's, they've always been important. They're always something that the market keeps an eye on. It's just you have to know it. And so I can sit here and tell you, or you can do the homework and you can start drawing them and seeing how powerful they are on all time frames and just what they mean and how they end up coming to play. So for me, in each signal, I draw them. If I want to draw a retracement pattern, I start at the very low and I connect it to the very high. It's really that simple. 1 to 1 move, 0.382, 0.5, 0.618. Now, there's a lot of debate about other Fibonacci numbers or adding in other sequencing numbers, but usually if you can kind of play with that however you may. You typically, when you right click on any program's Fibonacci sequence, you can go in and change the numbers to however you want fit. I like to just do 0.25, 0.382, the 0.5, 0.618, the 1 to 1, the 1.382 extension, the 1.5 extension, the 1.618, and then the 2. And then if I get up over 2 Fibonacci extension, I'll go 238, 25, 2618. Just keep it simple. You can kind of see 0.382 here for, say, example, arc here. 50% was pretty close. Sometimes it's tough to be perfect, but this is another thing I tell people. It's just like support resistance. It is until it isn't. You have these levels that come into play. Don't expect perfection. Don't say, all right, as soon as it gets to the 382, it's going to fail. Well, sometimes, or pop, I apologize, sometimes it's not perfect. An example of perfection was actually Penn on this week. Whatever you think of Dave Portnoy, I really don't care. The news seems to be what it's going to be, and it's bad. Perceptually, it's bad, not good. Did he do it? I don't know. But let's look at the chart, because that's what we're more involved with. We care about it's the chart. But this blue zone was already in my brain a buy zone. Notice how on Thursday we hit the 0.618 perfectly. Once the 5 breaks, you expect this. You can trade fib to fib level too. I tell people that sometimes too. That's just how the market moves. So here's an example of the 0.618. Well, how did I draw it? I drew it from this low to that high. And it's amazing that people look at the fibs and go, well, they only matter sometimes. Okay, well, in a probability game, what is sometimes? Is sometimes a lot? Or is it no correlation? Anything over 60-70% is a pretty high correlation in chaos, and you have to think about that. So when you're in those moments thinking about how to trade and how important the Fibonacci's are, you have to look at where you came from, where you're going, and how powerful could it be. If the 0.618 is a stopping area here for pen on the bottom, it makes it really simple. This is where you're going to buy it, and this is where you're going to put your stop shortly below it, and just walk away. You don't need to watch it. You don't need to think about it. It's just really that simple. And you'll see fibs everywhere. On my charts, I draw them all the time. You know, sometimes they matter, sometimes they don't, in the sense of like importance. But you can see how they're not exact sciences, how they hold sometimes, but they can be important. I do a lot of this on the fly just to show you guys that I'm not sitting here trying to like make things fit for the purpose of trading. Like, it works most of the time, in the meaning that it's important. You draw your fibs. You always draw your fibs just in case. And also too, it's great with extensions. And that's one of the things that we got into with Tesla, saying like, where might it get tired? After the 1-to-1 move, you had the 0.5 became important. You backed off. The 0.1618 became the bottom of this candle. Now what's next? Probably the 2. And if it doesn't, well, what does that say? You know, maybe it's just a big move needs to be, profits need to be taken by the people who own them. Keep in mind that again, if you're trying to put certainty on an uncertain game, you're just going to have problems. If you're going to expect the 2 times range, what if it goes a little above it? Does that invalidate it and then come below it? No. What if it comes just short of it? Does it invalidate it? No. Again, I mean, if you've traded long enough, you've seen this happen to your own stocks where you had specific targets and something's come up short and then it's failed, or it's gone over it and then it's failed. Or on the downside, you expected to buy something at some certain number and it went much lower, but then it came right back. Like, that kind of stuff happens all the time in trading. And that's where playing the probabilities, knowing your stops, knowing your entries, and just you have to be willing to admit you can be wrong. If you can't do that, don't trade. Because trade is going to humble the absolute shit out of you. And Fibonacci numbers, I use them just as a roadmap, just as a guide, just to keep it simple, just to help give me places along the way in trading where I can say, you know what, is this a good spot for take profit? Is this a good spot maybe to add? Is this going to be an area where maybe for the next week the stock might be waterlogged, where it just doesn't go anywhere because the Fibonacci's are in play? Like, that kind of stuff happens all the time. So I'm just drawing these on the fly. If you have, this is the high, this is the low. That's the 1-time range. Look, you know, the 1.382 was the first resistance. So, I mean, you can see this kind of stuff happens everywhere. I'm going to bottom line it, keep it simple. Draw them from the highs to the lows, or the lows to the highs if you're doing a retracement, like dead cat bounce or a bounce off the lows. And think of them as not perfect spots, but things that you need to look for. Just potentially as spots that are going to matter. And always think too, the market trades from fib to fib sometimes, meaning that if you're in an uptrend, you go to the 0.382, you pause. Then you get to the 0.5, you pause. Then you get to the 618, you pause. Once you get over the 618, you usually rocket up to the 1-to-1. And then after you get over 1, you get the 1.382, you can pause. You get to the 1.5 fib, you pause. Just keep it that simple. If you have questions, please put comments down in the section below. I'll try to answer them as best I can. I appreciate it, everyone. Again, this is Dan Max, the trading agent, back to basics, Fibonacci's. Appreciate you guys.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.